we've had some volatility in this market. Again, if you guys think about these meetings as we meet somewhere every week to talk about what's happened and then go over some content to help build on what you're working on and so on. But if we updated everybody this week, I think everybody's got their finger on the pulse. It's been very bullish. Bulls have had a way of coming back and making new all-time highs in the stock indexes. Today might be a little bit of a change. In the trading room, George mentioned about the bonds and the yen. He noticed it first where they jumped, both of them in unison. They've come back a little bit, but not certainly their whole rally. But if you look at a bond chart from this morning, this is just a 1 minute. This was the rally that he's seen early. And, it spiked and didn't just rally. It rallied pretty hard, pretty fast. And with that inverted correlation that stocks and bonds have, that weakened us up. We were trading around 51.5, 52 even. We broke another 10 points, then rallied, chopped sideways, had a little head fake, and got weak again. And here we are retesting where we where we closed yesterday. But that's 5 or 6 points below where we opened today. The NASDAQ at times have really been slippery and getting hit pretty hard. The only strong market that we watch on the board, aside from the end of the bonds, has been crude oil. The energy sector and crude oil, or because of crude oil, the energy sector has been the strongest sector out there. But oil is still strong on their session highs near that 51 even area, but that's some resistance for them. They're up over 2%, almost 3%, because Saudi Arabia is going to cut production, and they, like to manipulate prices. They've had their way. Both markets are making lows right now, or at least the NASDAQ and now the S&Ps. You see them fall out of bed. But another headwind is this Cataloni. I can't pronounce it, but they're looking for their independence from Spain. That's not bullish for markets. That's very bearish for IBEX and Spanish markets, and bullish for Spanish treasuries. That does bleed over into European markets, which bleed over to our markets. So it's not as bearish, obviously, as it would be to the IBEX for us, but it's certainly not a bullish event for us to continue to run higher. You could see that the European markets are much weaker than us, down a half, down a third of a percent in the Euro stocks and the DAX. So they're more affected by that whole Eurozone, effect and relationship that all those markets and economies have on each other. So this could be a reprice, the beginning of a correction where we don't just grind higher every damn session and end up making higher highs almost every other day in the indexes. This seems like it could be something that at least makes some longer term bulls into profit taking mode. Now, that doesn't help a lot of short term trades, but it could, because if you're looking at playing it only from the long side and you're getting away with a lot of trades, that's great, because that's worked and that's been helpful. But just be aware of what I just ran through. Also, Carl reminds me of the dollar and how weak it's been, which is indicative of the strength in the euro and in the pound. You could see, if I pull over my quote sheet, just an easy summary. Down in here, the yen is up 0.5%, the pound's up 0.5%, the euro's up 0.5%, essentially. So dollar weakness usually leaks into commodity strength, and that's what you got. Now I'm going to bring in, for today's kind of content portion of the meeting, one other thing. FOM, there's not really a heavy economic calendar this week. FOMC minutes usually don't, but can move the markets. That's Wednesday, tomorrow at 1 Central. Usually they don't, but they can. And once in a while they have. But this speech is delayed 1 hour by the Cataloni president to 1 o'clock Eastern, which is noon Central. The opposition lawmakers abandoned parliament speech before it begins. I see. So this is a pretty big province, whatever they call it, region, to Spain. And does it have a Brexit feel? It kind of does. It seems like it's an important region to the country of Spain. And that's why the IBEX has been taking it on the chin when it becomes apparent that they still want their independence. Now let's bring in Anthony. First, I want to bring in, wow, this is the 10-year note. Way too many reds and greens, but we're going to filter it down. Let me bring in Anthony and do a sound check with him once again. Anthony, are you there?
Yeah, I'm here.
All right, I'm going to put you in my headset. Hold on a second. So, Ganlin government, more headlines. So many of you guys know, I'm hearing a little bit of a back feed. You guys hearing that?
Is it background noise from me or
I
no?
think so. It's like, it's not on the background. It's like a buzzer that's going off. Boom, boom, boom. I don't hear it now. I don't think it's,
I'm not hearing it.
yeah, I think you're fine. Let me just turn on your volume a little bit. So a lot of you guys might have known Anthony. If you didn't meet him, you'd recognize him. He was at the workshop in July. He's a prop trader. Circle back into a prop firm. How many prop firms you work for before this one, Ant?
Oh man, 4 or 5
And this,
over 15 years.
okay. So and now this one that you're with now, you just started up with them, right? In the last couple of weeks.
Yes, this is my first time being at a prop firm and trading on Market Delta,
Oh, good.
which yeah, it's exciting.
Did you are you trading everything that you're allowed to trade most every market, right?
Yes, yeah. I'm looking at mostly the E-mini, Nasdaq, 10-year, 30-year, and oil.
All right. Yeah, those are good markets. You're watching but not trading the E-minis, the ES, right?
Oh no, I'm trading the ES. I'm
Oh, the ES
watching
too.
it, but if it's not too busy though, I'll just kind of stay out of it.
Let me ask you your filter for the 10-year. So I got my. Are you looking at my screen share, my 10-year chart up? First off,
Yes.
what PNF number you use? I got this on a 1/6, but
I was
use.
looking at the time, I think I was looking at 1/4.
All right, let's go to 1/4. 6 is probably too high of a number because it doesn't move that much.
Yeah, I think so.
How about the filter as far as the percentage imbalance? I have 600. Is that too high?
You know, that's what I have it at. I might tweak it. The min diff, do you have 450?
No, I've got this is way off.
Oh,
24.
that might be it.
Yeah, that is it.
That might take out some.
It should take out some, is right. Huh? To take out any. Well, you know
Yeah,
what?
there's still
450. If you think about it, there's thousands of
yeah.
contracts.
Yeah, I still might tweak it, but I think for this purposes, you'll still
Yeah. Well,
see it on Friday.
so this was on Friday, this example, and this could roll. Friday was the
It's too
6th.
far.
I went too far.
Yeah, it
Right.
starts right about there.
So you were talking about seeing something in the 10-year that you didn't see in the bonds. And let me just circle this real quick because I'm going to pull up a bond chart next to it. Right in here, you start to see some green imbalances, which are indicative of support in the 10s. All right. Now,
Yeah.
you want me to pull up a bond chart next to it?
Yeah, that would help. Yeah.
All right. So for me to do that, let me just replicate this chart.
Or you have that the bond 1/3 up.
Yeah, I got it. I just
Okay.
replicated it. I'll pull up this tab like this.
Oh, there you go.
Shoot. No. Oh, shoot. It's getting buggy on me here. Hold on. 1/3. That's the bond. Keeps jumping. All right. And now I want to go to the same period on the 6th, just around 9 Central. Oops, too far.
No. 7:45 ish. So back a little further.
All right. What do you have this min diff at?
I have it at, let's see. I have the same. Oh, 398 for the min diff actually.
You have it a 1x3 also?
Yes.
And then 600 for your threshold percentage?
Yes.
Okay.
Yes.
All right. I want to make sure this is the same moment, though, in time here.
You're gonna have to scroll back a little bit in time. And even before that, you could kind of see like, yeah.
Let me just open up the screen real quick. So you're talking about 7:45 Central. And for guys who don't trade treasuries, understand that 7:20 Central Time is when the bond market opens up. That's their 8:30 for stock indexes. Make sure you know that. So what were you just looking at a bond chart? What were you looking at?
Well, basically, I mean, the SPOOs weren't doing much, so I didn't see much there. And the bonds were at their lows for a while. I mean, the 30 years was off 7 points from their high, so they were on a really big downtrend over the course of a lot of days. And down here, the bonds just looked like there was no reason to really buy it. So I was waiting to see if they were going to flush it or if they were going to do some kind of down up bar. I was kind of just keeping an eye on it right there, like 745, because it looked really weak. It was going through its low, and I didn't necessarily want to reach for it and hit a bid and have it snap back on me, but I was just kind of cognizant of what was happening. And then when I looked at the 10-year, I was like, wow, this thing looks like it's got some real support there. So I'm not really a spread trader. That's not my thing, but what I wound up doing was getting long in the 10-year first at like around 8 o'clock. And
So this is the bonds that make a nice coil.
well, yes. So yes. But if you look at it, they did that and I was short. Let's see. I was short there. Oh, I didn't get short until after. I got short the bonds at like 8:30 after they went back down through that green. I was short at 16.
16. So you're seeing more weakness in the bonds, and then at the same time, we pull up the 10-year at 8:30. Go ahead.
I was long at from 8 a.m. and the 10-year at 24 half.
24.50 right there. So I put my yellow line where he was long. So you were seeing strength in the 10 years and weakness in the bonds off these edge zones, right?
Yeah. And you could see at 8:30 the bonds.
Shoot, hold on, I lost my chart. There it is. Got it. Let's go to the bonds. Man, my screen went. Here it is. I had screen issues this morning. Go ahead. At what time?
So you see at around 8:30 the bonds get through that level, and that looked like really shaky to me, and it was going through its low. And so I was already long the 10-year, but it wasn't going in my face. It really like barely went a half tick against me. So I was looking to get short the 30-year, and I wound up getting filled on the offer at like 16.
Probably
So
right in this bar right here.
yeah, I think they went through it, and I sold on a pullback of the retest there, and I think I sold half my size, like half my 10-year size. So I was 2 10-years to 130-year.
Okay. So you're long, let's just say 10 years, and you're short 5 bonds, for example.
Correct.
Okay.
Yes. So, I mean, my intention was not necessarily to catch like some curve move. It was more, you know, in a vacuum, the 30-year looked weak and the 10-year looked strong. And obviously they're correlated, but if the 10-year really gave way and they went through that support, I would have plenty of time to get out of it and I still have half my my half size of 30 years on short, and I'd be short. And if the 30 year snapped back on me, then I would get out of my 30 years, and then I would be long the 10 year, which had good support. So what wound up happening was I was the short from 16 there, that yellow line, and the 30 year slipped to like '07, which is a 9 tick move, and that's a pretty big 9 ticks for the 30 year.
Yeah, it is. So now you got
And
a 9 tick head start in the 30 year, and you're still pretty much where you got long in the 10 years, right? They were still trading 24 half. They didn't move against you.
exactly, and they were really thick, so it was like, the book was thick, so I just had my eye on it and ready to get out if I needed to, or ready to get out of my 30 year. And then once that 30 year snapped off that bottom like that,
Right in here.
it was yeah, it was at like 10, 10, 11, 12 really quickly. And so once I saw that, I was out, and I was out at 12, and it wasn't, it was still a winner, but it wasn't, you know,
It was half the winner, the
yeah,
max. You had plus 9 or 8 or 9 into it, and you take 4. But at that point, what was the 10 year doing? When you got out at 12 for a 4 tick winner in the bonds, what was the tens doing?
the tens was already, they were going up. They were bid maybe 26 or so.
Wow.
But they don't, I mean, how those things are. They don't like move, that many ticks at a time, but they just looked like they were really stiffening up. And the 30 year moved a lot quicker. So that wound up being a good out. But then once the 10 year started to move, that thing's like kind of like a freight train. It just like kind of went through size, you know,
Yeah. In the 10
step
years,
by step.
like you guys could see in the footprint here, you could see how much volume is all in here. And then all of a sudden it gets smaller. It's a little big in here, but it's smaller. When the 10 year starts to go, it like goes from offer to bid and never goes bid to offer. You know what I mean? Right? So
Yeah,
it's not going back and forth. It's just going up like step by step by step in one direction. And it's not coming back off to let shorts out. So this becomes a
exactly.
pretty big move. So you got out, you put on a spread, you legged into it. The bottom line and the reason why I wanted to bring Anthony in here was to show not necessarily that you have to trade two markets, but to watch two markets, you find what's strong, what's weak, and let the edge zones like dictate that for you. You really didn't have a lot of green support in the bonds, and you had a lot that the 10 years were sitting on after 8:30, right? Is that when you got
Yeah.
in?
I got in at the 10 year that earlier, 8 a.m., but at that point I really didn't know. Like I couldn't, I knew there was support there, but I didn't know that it was going to hold. I
Yeah,
mean, it
right.
could have easily went through there. So, I mean, I could have not spreaded it and just been long the 10 year, but when the 30 year slipped through that support and it kind of gave me a decent fill on the offer, I was like, okay, I'll play it this way. But there's a few different ways you could have done it. You could have not spreaded it, but I do think it's an example of the edge zones working, and then showing that once the 30 year got some bid to it, the 10 year definitely confirmed that it was strong.
Yeah, and it started doing this, so it was easier to hold it. It's one of those things where if you didn't spread it off, you would have botched up one side or the other. That this allowed you to hold on to the winner for the confirmation.
Yeah, yeah. If the situation was reversed, I would have got out of my 10 year and been short my 30 year, and then hopefully, held those if it really went. But
So this is a moment where you don't know if it's going to hold in here. You've got support. You never know anything, and the probabilities when you get the bonds to move lower pretty quickly, make new lows to '07, and you really don't take any heat, and it doesn't go any lower than here. You're like, well, the tens are stronger. There's no doubt about it. If the bonds keep going lower and they break this level, then all bets are off probably. But if they hold this level and the bonds do what they did from '08 to 12 and they skip, yeah, sure, you left 4 ticks on the table in the bonds, but who cares because you started getting to this, train to start moving.
Yeah, exactly.
And that's when you have the probabilities of it holding. And if you didn't have your bonds on, maybe you would have scratched these 24 halves.
Yeah, I would have been a little more nervous about him for sure.
Yeah, because that's when you're in an outright, you feel naked and you're like, well, I don't want a winner to turn into a loser and I've been in this trade. And so you get shook out of good trades more often.
Well, especially if you look at the chart, like a 60-minute chart, I mean, it was weak for, it did not look pretty. Like it could have flushed if it wanted to.
This 10 year,
10-year or the 30-year, yeah, just bonds in general.
but to go back and see like the bonds, they never built up the support that you've seen in all this. Go back to this green, all this green that was in and kept coming in. You never seen that in the bonds. All you've seen is this one time come in and they take it out. That's when he got bearish bonds and didn't even see the 10 years roll with it. And you waited patiently because if you didn't, you know what would have happened. You would have reached, you would have sold 12s, you would have puked 15s, and then you would have seen it go to 7.
Yeah, for
And,
sure.
that's just what happens instead of, these zones keeping you a little bit more patient as to what should happen.
Yeah, and then once the bonds caught a bottom there, I mean that the 12 I got out at turned out to be a really good out because before you knew it, that thing was just
Yeah, there it goes.
off to the races. I mean, if I was feeling a little more aggressive, I would have tried to buy a little bit in there too. But just I felt happy just having my 10 years on.
Yeah, so many different things could have happened negatively if you didn't have both of these on. You could have you could maybe would have held the bonds and ended up scratching or taking a -2 on it
Hmm.
because you wanted the 07s or 08s. That's what our minds do is that our minds know what we could have got out at, and that's where we want to get out at. So you're short from here. You could have got out 7 or 8 for a +9, and you don't, and now it goes to 12. It doesn't feel like a 4-tick winner. It feels like a 5-tick loser because what you
Yeah,
left on the table.
yeah. You let your entry dictate, what you're doing rather than what the market's telling you.
There you go. Yeah, you let your entry dictate, and the entry is typically just unique to you.
Yeah,
If it's unique to the rest of the market, it's a crappy entry. But your entries are always unique to you, and you let what Anthony just said. You let your entry dictate your decisions, and not the market and the price. The other reason, we bring this up, and let's scoot this chart to the side, is this is just an example of two ancillary markets. It's obvious why the 30-year bond and a 10-year note are going to correlate. They're both treasuries with different expirations on them. So they're going to move differently, and they're going to move at a different rate. And that's what Anthony talked about, the curve. This wasn't a curve trade where, the curve is steepening, the curve is flattening. That's something treasury traders, that spread, always look at, the strength and weakness of the expirations, and that dictates the curve. I don't want to get into too much detail with that, but they're obviously going to relate. If they're both going up, but the 30-year is going up much faster, then that's stronger. Yields are going to go down faster on the back end because price is going up faster. 10 years are going up, really not as much. This was reverse of that. When the bonds got going, the 10 years really got going, and relationship wise, they both got strong. The 10 years were just showing more strength throughout that whole sequence that he picked up on. And also remember that after 720 is when the treasuries open. Like I mentioned before, that's the index is 830. So don't think, well, he's trading pre-market. Pre-market for bond traders, for treasury traders, is before 720 Central. Always has been. And so you could kind of look at that relationship. Have you seen any of this when you are comparing the S&P minis with the NASDAQ or any of the
I,
different correlation sets?
yes, I've seen it. I haven't played anything like it yet, but I imagine there'll probably be a time where I will. I just lately it's been a little choppy for me, but I think once the rubber band kind of loosens up a little bit, there'll be some opportunities. I mean, you got to be. you got to be careful. It's just like that scenario. You don't necessarily know if you're right or wrong and on which piece.
Yeah.
So you have to almost be a lot quicker, or I would have to be a lot quicker with that kind of setup.
How
The
many
bonds
guys?
are a little thicker.
How many guys are in your office roughly?
There's like 40 or so, and then there's more that are remote.
And you like it so far?
Oh yeah, yeah, I like it a lot.
Do they have areas, meeting rooms and conference rooms, or areas to go and BS?
Ye- yes, yeah, they do, but it's like it's it's still like anything. There's a lot of guys training a lot of different things, some
Right.
options guys. So this this room still kind of helps probably the most because we're kind of all in the same boat.
No, that's cool. And then you got the guys you'll find guys that are trading things that are more similar to you, and you pretty much just it's set up like a regular prop firm was, right? Like most of the other ones were.
Yeah, oh yeah, like a lofted space, just desks and rows and everything. Kind of see everybody, which I like. My previous place was a little more people were closed off, and it kind of wore on you a little bit.
Yeah, I
Just felt
imagine.
like, yeah,
Do they allow visitors or no?
yes,
They
yeah.
do.
Come on by, man.
All right, we'll have to do that. We'll do a meeting from prop firm. How far? Where are you at in the city?
I'm at Harrison and LaSalle, so not too far, right by the Board of Trade.
Yeah, as I say, right down the block then, right? It's on
Yeah.
LaSalle, a few blocks north. You're not a Cub fan, right? You're a Sox fan?
Yes, more so, yeah.
All
Although I
right.
don't watch too much baseball,
No,
but
I just want to make sure. Forgot to ask you that before I opened.
yeah.
I don't want the Cubs to win. Last year, I really didn't care as much because, give them one. I don't want them winning this year.
I mean, don't get me wrong. I'll have a few drinks to celebrate either way.
Yeah, it's an excuse. That's why most fans who are Cub fans because it's a big party over there.
Oh yeah.
They think they have a lot of fans,
Yeah.
but for the most part, they're jumping on the bandwagon. They have fun. Younger people especially. But getting back to the point of why I wanted to bring him in is now with these edge zones, you should be able to see and differentiate strength and weakness between ancillary markets. So, like he said, strength in one, weakness in the other. Do you know of a glaring example of that, even though you didn't play it?
Oh, and the Spoos Nasdaq.
Yeah,
Um, no, but I could probably find one, or I'll keep an eye out. I don't want to give you like a half-assed example of one, but I know they're going to come up because those two are just can be so different sometimes.
right.
And even the Euro stocks, once I get that up, I'm sure there'll be a lot of examples in there too, and that's a good market
That's a great
also.
market. Yeah. Well, you and I know the same guy. Uh, Probably the best trader we both know is
Dan,
Danny. Yeah, and
yeah,
he was a
yeah,
big Eurostox trader.
yeah. But that definitely will. I've seen some other setups in there where, yeah, the Euro stocks and SPOOs are just opposite, and then turns out one's right, and then the other one just catches up. So
One's
I'll
cheap,
keep an eye.
one's expensive, and
Yes.
then the key is which one's right.
Yeah. Yeah. And I think that kind of helps you to be a little more patient too. Like you don't have to necessarily reach for something. You can kind of
Let
try and,
let it come to you.
yes. Yeah.
Which one is generally? The probability's always been the one that's trending is right. Would you agree with that? Let's say the Eurostox is weaker. So then it becomes, all right, it's weaker versus what? It's weaker versus the ES. All right, we could see that. So the ES is not making lows and the Eurostox is. So it's a question is the Eurostox cheap because the ES is right, or is the ES expensive because the Eurostox is right?
Yeah.
And
Yeah. And in that case, yeah, you want to, especially nowadays, you want to be careful just shorting the SPOOs with confidence just based off of that because, yeah, the Euro stocks might be getting hit for some other reason and then they'll just eventually go back up.
So you want to be patient either one. You could be patient if you're trying to get short the ES, and you could be patient trying to pick a bottom maybe in the Euro stocks. But they're just duking it out. But this is a way, if you guys remember, in the very early track 3 videos, I do a video on market relationships just to compare with highs and lows to get people warmed up as to how important intermarket correlations are. And just to pull up a brief one, if you look at the S&Ps, they're coming in to some support in the low 40s that we talked about pre-market. This is just now, right? This is just over the last 10 minutes. They're coming in to possibly a target. And at the same time, around 11 o'clock Central, we'll open up the NASDAQ chart and say, same thing. So there is no difference really that you could say, hey, this is a good bottom to pick, because you're looking at one having some nice resistance. If it gets through, the other one has good support. But let's do that. Let's kind of keep updated on how you look at that, because that's powerful.
Yeah, absolutely. I mean, the tighter the range is, it's going to be harder to find a good example. But as this thing loosens up, I'll definitely keep an eye out.
Yeah, because that's a great hidden advantage to do that. Support in one, not in the other.
Mm-hmm.
No, John, I didn't. Hold on a second. Do it again. I didn't get it. Does anybody got any questions for Anthony? Again, the whole point is recognition. Who was strong? Who was weak? Bonds were weak. 10-year was strong. He was comfortable being long one, short the other, and then ended up making money on both, and ended up maximizing his profit because playing that, not necessarily as an outright spread, but just, hey, he was short in a good spot. Let me show you something here, because this is important. When someone, I don't know, and neither did he know, if this 16 at the moment was a good spot. We don't know that, for how good of a spot. But what we do know is it's probably not a terrible spot if he's wrong. Why? Well, if he gets short in here on the move lower, there's a chance it's a terrible spot, because the rubber band comes back in your face. It hadn't retraced yet. That's what he meant when he says reaching for it. But at least he waited for a pullback. So if he's wrong, yeah, could it come up like here? It can. But chances are he already let the rubber band retracement kind of take effect, and you're most likely not in a horrible spot if you're not reaching. When you're reaching and you're wrong, chance that's a terrible spot. But when you're patient, you're giving yourself a little bit of, you're allowed to be patient, probably because you were long the tens, right? But you had this area, and that's the difference between trading after the fact, like reviewing stuff, and then in the moment. We never know if it's a great spot. So don't ever try to get yourself emotionally in a position to say, I'm in a good spot, this is awesome. You don't know it for sure, and shouldn't feel like that until it starts going your way. Then you kind of go look back and say, hey, it was a good spot. You think it's a good spot, or you wouldn't put it on, don't get me wrong. But you never should be super confident to say, I got him. I'm sure it's
yeah. Being a perfectionist in this industry is not always a really good thing.
Yeah, you don't want to feel confident, super confident. That's the fine line of trading is, how do you get confident even though you're not supposed to feel confident when you have that open position on? That's the skill, How do you get confident when you should be a little insecure about your locations when it's there? You don't know, because if you think this was a great location before it was a great location, and then it's not, and it starts going 22, 24, you're going to start thinking this was a great location. There's no reason why it went up. The market's wrong and sell more, or you're going to hold on to that loser because you were so confident that 16s were a good location that you're going to have a tough time changing that opinion, and you should change that opinion. So,
Hmm.
you put them on and say, okay, there's a good location, and so on. But the point is,
And I would say just one other thing on the flip side, if it's going your way and it's going your way for the same reason you got in, there's no reason necessarily to get out until you have a reason to get out too, you know? So if it's kind of proving you right, you got to try and let that ride until there's some kind of sign, until you'd be uncomfortable, being in it. So if that didn't go bid on me there, I probably still would have held it short until there was some reason or some target hit.
yeah, no, that's a good point. You were seeing the market well. You weren't letting your emotions dictate your decisions or your entry. You let the market do it. So now I look at the 30-year. When they took off, this is what the 30-year looked like this morning when George mentioned that. Look at the 30s; they're bouncing or rallying, spiking. What time was that? That was around. They're starting to come off now, but
Yeah.
around 9 o'clock, just before 9. So that was right in here.
That was a good trade. I didn't get on it, but it was.
They stayed strong for a while. They
Mhm.
rotate and they come up into this red. It stymied it a little bit, but it's not really bearish until now, in my opinion, because it took out this nice green and left some red behind. So this is some overhead resistance, 23, 4, 5, 6 in here.
Yeah, it took a stab there at like 24-ish, but didn't hold it.
Bonds are a good market. They sometimes are pretty true. I know a couple guys in the edge room, like Dan, trades a lot of bonds, traded treasuries for a long time. So, but this is good. I'm glad that you came to the workshop and that it was kind of coincidence how you got into it,
Yeah.
right?
Remember I called that Friday, the Friday before, and talked to you.
Yeah, that's right. Or
So
you would have never kind of hooked up to everything.
yeah, no, I'm glad I did for sure.
All right. Well, thanks again for coming here. This was good. I mean, when you told me this the other day, last week in the room, that it caught my eye because it's real price discovery. It's real stuff. Compare, contrast, and now to have like visuals to make it easier to do that. Not that you catch it all the time, but if markets loosen up and they're probably set to do that, you'll get more examples of it. But thanks
Oh
again.
yeah,
All
sure, no problem.
right, man. I'm
All
gonna.
right, then. Bye.
Carl also thanks you. It was great to see you, meet you. Glad to see you back in here. I don't know if that's a good thing or a bad thing. Carl saying he's great. It was great to meet you. Anthony says likewise. So you guys could exchange pleasantries in the edge room. Bruce wants an apology. I'm not handing out apologies here, Bruce. They're not easy for me to come by. But he wants one because him and Carl, here's what Bruce said. He wants an apology for him and Carl for hurting their feelings. Yeah, see, so not getting one. And Mark, I was just thinking of Mark, thinking if there's, he puts an LOL, but you'd be one of them. Well, you three guys, I could say, I won't say it, because I will be apologizing. All right, good stuff though. Good stuff. And when you see cleaner, see if you could get to a point where you see some clean examples of this in real time, it's so much more of an advantage over everybody else because it's not easily seen by them at all. Period. It's just not. Whether you kind of understood a lot of today's content or not. I mean, Anthony, like me, is a 15-year prop trader. So he knows what he's talking about. I'm going to stop the recording.